You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning, traders. This is your Options News Rundown for Friday, June 29th. Our first story today is from CNBC. Wells Fargo led bank stocks higher today as most of the biggest U.S. lenders announced plans to boost stock repurchases and quarterly dividends by billions of dollars after passing the Federal Reserve's annual stress test. San Francisco-based Wells Fargo was the big winner from this year's regulatory ritual because investors had feared the scandal-ridden company would get dinged on the qualitative portion of the exam. Instead, Wells Fargo passed and won permission to buy back $24.5 billion in shares, more than double last year's, and clobbering the $15.5 billion estimates. The Fed gave 34 of the biggest banks the go-ahead to pay dividends and buy back stock after the second part of the annual stress test, it announced Thursday. For firms that disclosed their plan approvals, the total capital return rose 22% to $172 billion, according to JP Morgan Securities analyst Devin Ryan. Only the U.S. unit of Deutsche Bank had an outright failure in the exam, limiting the German firm's ability to pull in a dividend payment from its American businesses. Goldman Sachs and Morgan Stanley received conditional approval, but only will be paying out roughly what they did last year. Next up is a story from MarketWatch. U.S. stocks market indexes are advancing today, led by gains in banking stocks. A rebound after yesterday's upbeat session was driven by gains for financials and other cyclical sectors such as energy, industrials, and consumer discretionary. Investors may be encouraged on the trade front as China reportedly eased restrictions on foreign investments in sectors such as agriculture and banking. Investors have been rattled this week by worries that tension between the U.S. and its major trading partners, such as China, could end up hitting the global economy. Our final story is from Bloomberg. Bitcoin's meteoric rise last year had many observers calling it one of the biggest speculative manias in history. The cryptocurrency's 2018 crash may help cement its place in the bubble record books. Down 70% from its December high after sliding for a fourth straight day today, Bitcoin is getting ever closer to matching the Nasdaq Composite Index 78% peak to trough plunge after the US.com bubble burst. Hundreds of other virtual coins have gone to all but zero, following the same path as Pets.com and other red-hot IPO offerings that flamed out in the early 2000s. While Bitcoin has bounced back from bigger losses before, it's far from clear that it can repeat that feat now that much of the world knows about cryptocurrencies has made up their mind as to whether or not to invest. Bulls point to the Nasdaq's eventual recovery and say institutional investors represent a massive pool of potential cryptocurrency buyers, but regulatory and security concerns have also kept most big money managers on the sidelines. Bitcoin declined as much as 4.2% to $57.91 today, the lowest level since November. It traded at $58.78 as of 10:33 a.m. New York, down 59% for the year, and heading for its second quarter loss of 14%. Other coins such as Ether and Litecoin slumped more, with the combined value of tokens tracked by CoinMarketCap.com declining to $236 billion. At the peak of cryptomania, they were worth about $830 billion. While it's difficult to find fresh catalysts for Bitcoin's drop today, hacks on 2 South Korean exchanges and a regulatory clampdown in Japan have weighed on sentiment in recent weeks. Regulators around the world have stepped up scrutiny of cryptocurrencies, unconcerned that they're a breeding ground for illicit activity, including money laundering, market manipulation, and fraud. That is it for today. You can find all of these stories and more on theoptionsinsider.com. Dan will be back next week with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.